Debenhams shares slumped on the back of its third profit warning of 2018 this week. Carpetright took a tumble after posting a £70 million loss, and House of Fraser's creditors agreed to its CVA, putting 6,000 jobs at risk. These are just the latest developments in the crisis facing the UK high street. Joining me now to get to the bottom of the issues is Nicla Di Palma, equity research analyst at Brewin Dolphin. Nicla, thanks so much for coming in. So, according to the Centre for Retail Research, 2018 will probably be the worst year for retail since the recession, since 2008. So what's going on? Why are the problems getting worse, apparently?
Well, first of all, the way consumers shop has completely changed. As we know, online is growing massively, and actually the UK is one of the most developed countries when it comes to online. And also the second problem is we have had for quite some time an excess of retail space. The US and then the UK, followed by the UK, have the highest square footage per consumer. We simply do not need as many stores. I remember reading some research that said in the past you needed 200 stores in the UK to cover the entire country. Now you only need 75 in very densely populated areas, and the rest you can cover with online. Online has actually been an incredible game changer.
Now, whether we're talking about Marks and Spencer's, New Look, Mothercare, Debenhams, House of Fraser, the list goes on. We're seeing job cuts, we're seeing CVAs, we're seeing store closures. Is that just going to continue from here?
I think it's going to continue. As I said, there is excess space, excess capacity, and the truth is there are some retailers that are doing well, that are surviving, but they are not those you mentioned, because unfortunately they don't offer a differentiated product or an incredible service. There needs to be something unique to that retailer to incentivize the shopper to just go in.
So what do you think our high streets are going to ultimately look like? Are they going to be completely different? Is it all going to be coffee shops and restaurants?
Well, there will be plenty of coffee shops and restaurants and actually experience places, say golf, nail parlors, beauty places, trampoline parks. So it's going to look a few stores as we have now, clothing, DIY, but most there will be experiences for the consumer who is looking for something different, especially the millennial consumer.
Now, we've heard just this week that House of Fraser had its CVA approved by creditors. It's not only House of Fraser, it's also New Look, Carpetright, Mothercare. They're all looking at implementing CVAs. Obviously, the landlords are very critical of this insolvency law. I'm wondering what your view is. Do you think it distorts the market?
Well, it partly distorts the market, but the truth is these retailers find themselves with incredibly long leases. These were entered 20 years ago. I think Debenhams' average lease length is 18 years, for example. So, obviously things are changing, leases are much shorter, but I think we need to see, CVAs are just remedying a problem of the past, and possibly with new shorter leases, there will be less need of those in the future.
Now let's talk about some of the individual retailers. As I know M&S is in your coverage, and just this week we heard that it announced a tie-up with Microsoft in order to expand into digital. There was also some discussion about it making a pact with Amazon, but it's gone with Microsoft, and I'm wondering whether digital has to be the way to survive, and do you think that M&S is a bit behind the curve here?
Well, digital is essential these days. I mean, it's 20% of the market. There are estimates that say it's going to be 40%. And clothing is quite good, particular appropriate items to be shipped. People don't want to get bothered going into shops and everything. So digital is essential. And Marks and Spencer already had a new website a few years ago. So, this type up hopefully will make things better for the consumer. And is it behind? It used to be behind. There is more to do in terms of delivery. The consumer expects everything basically now, or within the least time possible. And also, but the key element is you need to have the right product. So
do you think there's potential upside then for M&S?
Well, if they manage to fix the collections, I mean, why not, right? It's not as simple as it sounds, right? Because you need to appeal also to a very big, different range of customers. But I think if you fix the product, you do fix a lot of problems.
Now, despite the struggles in the retail sector, we've also some of the biggest outperformers on the FTSE come from this sector. And one of those is Next, and I know that's in your coverage. It's up nearly 40% this year. So what's going on there? How's it managing to outperform the pack?
Well, first of all, they did fix the products. There were some issues last year, which were well documented. The CEO did speak about those, and they have better availability of the smaller collections. And also, the thing about Next is their digital offering is really strong, and they also sell third-party brands, so that's another source of income. They really got things quite right on the logistics front, and also they have much more flexibility than all the other retailers because their lease length is actually really low.
So I also want to ask you about the supermarket space, because that's another area which has actually seen quite a good outperformance. When you look at Sainsbury's or Tesco's, their shares are up around 30% year to date. And I'm wondering whether this deal between Asda and Sainsbury's has really reignited investor interest in the supermarkets, which perhaps was a little out of favour before that. We also had the tie-up between Tesco and Booker, and that proved very successful.
Yes, well, supermarkets, first of all, they are growing again after a few years of negative top-line sales growth. They are now growing again. What's happening? Well, pricing, they're just, first of all, transferring the increase in raw material prices to the consumer. And also there's new innovation. And the tie-up will be beneficial for Sainsbury Asda. It will allow it to possibly cut costs. As you know, they've promised a 10% price reduction for the consumer, but also they will ask for some price reductions from the suppliers. So yes, it's put back the sector back on the map for investors who were completely disregarding it until about 12 months ago.
But no doubt the competition in the space remains fierce, whether we're talking about the online competition from the likes of Amazon or the low-cost German retailers like Aldi and Lidl.
Yes, indeed, and that's why it's the margins, the profitability will always be very, very limited. This is not the time. It used to be a very oligopolistic sector with only the big 4 or 5, and now what's happened with Aldi and Lidl, who have a 15% market share, well, there you go. There's no way to raise prices. So yes, profitability will be limited, but there is a space, I would say, for a sector that generates cash, although possibly low profitability in terms of margins.
And what do you think about Ocado? Because that, of course, has done very, very well this year. It's up some 160% year to date. Of course, that tie-up with Kroger really boosting the price there. And also, it was described by one analyst just last week as the Microsoft of retail. And in some ways, it is behaving more like a tech company than a supermarket. Do you still see it as a supermarket?
Ocado is in truth a tech company. What they sell is their logistic infrastructure, their IT platform. So, the retail part of it is actually minimal. And yes, Ocado is a technology company. As we have seen, they sell their technology, and now it's the US. Who knows where next? Is it going to be Asia? Is it going to be another European country? So yes, to me, Ocado is a technology company, and whatever little they sell in the UK is becoming less and less important.
Nicla, thanks so much for your time.
Thank you.
That was Nicla Di Palma, Equity Research Analyst at Brewin Dolphin. I'm Victoria Scholar. Thanks so much for watching IGTV. We'll see you very soon.